I'll intro us real quick. So many of you know me. I've seen my face enough around here for the last 10 years. My name is Charlie Bathgate. I'm the CEO of our operations here at Sangucci Trading. And I am joined today by the esteemed Ron Friedman. Say hello to everybody, Ron. Throughout the day or throughout this series, I'm going to refer to Ron alternatively as Ron, Ronch, Ronchero. Ronchero was his original handle, in our community, in our chat community. So if you hear me throwing around different terms, it's all the same guy. It's this guy who's sitting here right in front of you.
This guy.
And and this series is all in lead up to the launch of our new Trading the Post course, which I will talk about briefly a little bit later on. But we want to start out and just kind of jump right into it. I mean, we were sitting around debating like, okay, what do we call this series? What is the essence? What do we really want to talk about? And what is the essence of what Ron helps traders do, and what do people really need right now in these markets, in this environment? And we were talking to members, we were talking to our team. Ron has quite the following, in our community of people who are ride or die, trading the post stands. And they were like, it's calm the fuck down. It's CTFD. That's it, man. That's what Ronch does. He helps you CTFD. And the more it seems like every single time I talk to a trader these days, over the last 3 weeks to a month, the common denominator has just been frustration, anger, pulling your hair out. It's been an emotionally exhausting stretch. So what better time than to talk about how to CTFD? The first series, what we're talking about today, the title of this is, why I don't care what the market does in 2022. And when we were talking to Ronch about how he approaches things, that's one of the core parts about how he approaches things. So Ronch, let's start there.
Sure.
What is your perspective on predicting markets?
I don't.
Cool.
I think that's where a lot of traders will not only get into trouble, but it's, what it does is it builds a bias. And then when somebody is standing on a prediction, then what are their choices? Their choices are, well, I know I'm right and I'm going to stick to it, even in the face of being wrong. So I would rather be in a situation where my philosophy is if I want something long term, I have to look at things short term and decide, okay, is it a good trend for me to look at something longer term that's been beaten up, and how much capital do I want to risk on that type of a play? And then once I do risk the capital, what sizing am I taking, and then can I trade around that position or that capital? So I have to have a broad view of the market. But if my broad view is if it has any impurities in it, you can easily find in any chat room, on CNBC, on Reddit, etc., you can get sucked into a mindset where everybody has groupthink and you're ignoring what the signals are actually trying to tell you. So I rely more on, okay, I'm interested in this. Can I play it long term? What are the short term signals telling me? And is that something that I can take on? So I look at the predictive factor as, same thing. Like when you let's say you buy a house out of foreclosure, that if you buy it in a decent neighborhood or a neighborhood that has the potential to turn around, you're not going to expect your foreclosure, to just be able to flip right away. You've got to put some cosmetics into it. You might have to do some repair inside. That's going to be something that's going to take time for you to make some money on. So in the middle, I try to really stay out of the mix because it's just a sucker's game, and you're going to wind up. I say it all the time. You're going to wind up that person at the Starbucks that's talking about, oh, I made that market call back in whatever day it was. And it's like, well, okay, why are you sitting in Starbucks telling me about it? How come we're not like going for a ride in your 911 cabriolet down to the club to have fucking lobster salad? Well, it's because you didn't trade it, right? You just talked about it, but you shit about it because you don't know what you're doing.
Right. Right.
So I don't like to join that camp. I stay far, far away from it.
Got you. So, okay. So then how do you said you like to say, I'm interested in this. I'm looking at this. How do you keep that from becoming bias? How do you stop interest from becoming a bias?
So I have, from time to time, everybody knows it, that's been in the room, will make mistakes, right? I will look at something.
That's bullshit. What are we doing here then? What are we talking?
I will make mistakes and I will lose money. It happens. That's reality. So, right. I will look at something and I'll just throw out, PayPal as an example. PayPal went through, a gnarly drawdown, and I was looking for an entry into PayPal. I took an entry into PayPal. I was wrong about it. I got out of the way and I avoided further losses. And now we're starting to see insiders pay attention and start to buy some of their stock, right? So those are some of the signals that I'll start to look for as to, can I, is it sold off enough? Can I start to get in? And as long as I'm willing to say I'm wrong and change and adjust my position, I'm okay with it, right? Because what being wrong also opens a door to getting yourself on the right side. So for example, in that PayPal trade, I was wrong. I took my long-term position off, but we already had protective positioning on it. So we just added to that protective positioning and followed the rest of the way down and did really well on it. So I don't get too wrapped up or locked into bias. If I look at it and I say this is right and it isn't, I just say that's fine. Okay, I'm done. I take the loss and that's it, and I move on.
Yeah, I think something you just said is really important, and I want to see if I'm right on this and tease it apart. So, you're really well known in our community for your ability to manage risk, right? You are always the number of down days that you have, that I don't think I've ever heard of you ever having a position that just like really ran against you. And I mean, like way in the past, you've had your serious hits, you've blown out accounts. We've talked about that,
yes,
publicly, yeah. But, certainly in recent history, that's not how you trade. And part of how you're doing that is, yeah, you so often have a hedge on. You so often have another. You're managing your risk via obviously option strategies.
Yep.
To do that. Do you feel like that is what allows you, in part, that makes it easier for you to be so directionally neutral? Because there's always, if it's not moving in the direction you think it's going to go, you've already got your foot is already in the water with your hedge, and you can just easily kind of flip to the other side.
Yeah, I think, just mindset wise, I think generally I'm an optimist, and I would rather and like to be long, especially with longer term positions, and knowing that that's what my disposition is. I'm also very careful about not getting too overzealous about that optimism, right? So if I see the opportunity at an area where I feel like it's good, but then all of a sudden it isn't, to me, there has to be a detachment of your emotion and to the money. And I think one of the things that I do well now is that if you're in a situation where there's a loss, and it's all relative, it depends on your account size. But for me, like an acceptable loss is, let's say, $1,000, $1,500. Like that's an acceptable loss for me. But a really good day when I'm trimming risk properly is, I might have a day where I lose, $300 or $400. And to me, that's a success compared to, sticking around and either averaging down or saying, no, it'll turn, like all of these other indicators and technical analysis and tape and all these other things help me get to that decision and just say, you know what, this just isn't your day, right? And that's in nothing more than that. And if it's not my day, I have the ability to just shut everything down and step away and then come back at it the next day.
And it wasn't always like that, right?
You know what? It was not like that for a long time. I mean, I think that where I really started to change how I was doing that was after my original mentor had given me all of the mechanics, and then Lucci had thrown tape reading into the mix. And once I understood and could combine both of those things, it really allowed me to be able to say, okay, here I know I'm right, here I know I'm wrong. And that was kind of like the turning point. So go back to 2017, I think, is where all of that finally came together, where my ability to take losses and admit I was wrong really started to come together. Before that, it was like I'd hang in there for big red days. You know what I mean? Like, okay, right. I'm down 10 grand, 15 grand, I'm down 25 grand. And then, by the grace of somebody, you scrape a little bit of that back, or you just eat the loss and move on. And I think psychologically there, you hear people talk about it's more of a endorphin rush to cut a big loser than it is to close out a winner. I don't know who those people are, but I can't ride that train.
Right. Yeah. Yeah, absolutely. What you're saying makes a lot of sense. I think that you, so what you're saying is essentially you got to a point in your confidence in your own skill sets and in your technical knowledge of the markets that you just kind of said. It sounds like you're saying you had the confidence that even when you were willing to close out a losing position because you were willing to accept the loss, knowing that you could come back the next day, and odds are you were going to make money. Like,
yes.
Yeah.
And it's also a combination of being able to sprinkle in different positions, because some people are scalpers, some people are swing traders, some people are long-term traders, some people are premium collectors. Like if you have the right mix, your short-term viewpoint might be different, but your longer term activities will typically keep you calm. And especially like we talked about, if you're hedged, right? So those types of activities, as long as you're continuing to maintain those activities, it's really going to help with the overall picture. But most traders are like one trade, in long, in short, looking for a move, take a loss, and now they have nothing, right? They're not working with anything. They're just looking for that bolus of, I know I can hit the home run. And for me, I can't hit a home run unless I have several things going at one time over multiple timeframes. And then it becomes an easier thing to manage. And you could become focused on 1, 2, 3, 4, 5 names in an index. And then you're working within those parameters. Kind of like what Francie said in the Misfit Happy Hour, he trades 4 stocks and that's it.
Yep.
So, if you narrow your focus, it really helps to keep a lid on things. Running around trading, whatever's hot for the day or for the week, whether that's long or short, can really just be distraction and taking you away from where the real money can be made. And I think that happens a lot to traders.
Yeah. How many names are on your watch list and Trading the Post in your program?
So, we have active positions on 2 equities right now in Trading the Post. And then, we're using different indexes to help us, with the gauge on the speedometer, so to speak. But like on a scalp basis, which I will participate in if the day is right, if it's a good day, we'll scalp like an Amazon, we'll scalp Tesla, we'll scalp Microsoft, we'll scalp Google. But those types of trades, or we'll do an AMD or an NVIDIA. So I would say that the universe that I look at of stocks is probably 35 stocks, and then I can go and evaluate pretty quickly, hey, of these 35, which ones are getting the attention and where do I have the best probability to make some money on that particular day? And more times than not, we find the right answer to that question. And you can scalp Tesla, the big dogs. You can scalp them for a few bucks, and if you're throwing around a 10 lot, you can have a really nice day. But that's not for everybody. You know what I mean?
Right.
Not every trader can step in there and do that. It's like do you have the account size? Are you good at scalping? If you're not good at scalping, that's not a place you should be.
Right.
You know what I mean? So understanding what it is that what your capabilities are and where you're good and where you're not good is a big deal. And that to me leads to a calm trader. Because if you have a niche and you're good at it and you're good at it, it doesn't matter if one day everybody around you is making a crap ton of money and you're not. That your niche is where you're going to make your money, right? You can learn by watching those other traders on those days. But if it's not your niche, you just stay away from it and stay in your lane, right?
Yeah. I was going to ask you.
It really helps calm everybody down.
I was going to ask you. I mean, you just gave one example of it. Like what when you help traders calm the fuck down. I mean, like, so just a quick bit of background for everybody. Ranch is obviously a trader in his own right. He's an educator with us. So he teaches classes. He's a huge part of the Sangalucci master course and an educator there. And then, in his rooms on a daily basis, he's wearing the hat of a coach sometimes, and you're really helping people saying, people are throwing ideas off of you and saying, Ron, what do you maybe thinking about this, what about this, or they're articulating their thought process. And a lot of what you're doing is coming in and helping them CTFD. Right. So when you're doing that, like, what do you find are the most common or some of the most common things that people are doing that are just like getting them pulled out of their own head and into a bad place?
I think, what happens a lot is traders are late to trades. I think it's a very common theme among new or people with experience of 3-4 years is that they will get caught in excitement, and instead of using a specific level or an area where they start to see the level 2 tape change, they'll enter a trade late. What will happen is there'll be an opposite move right when they enter. They panic, they take that trade off, and then all of a sudden the trade that they were jumping into that they wanted to have takes off on them. They enter again late, rinse and repeat. So, I see a lot of that. I see a lot of the of waffling back and forth because a trader is, let's say, for example, mixing up a time frame and entering in the wrong spot, or they're expecting, okay, this is the rocket ride, I can jump on it here and just and carry on. So I see a ton of that type of activity and traders just getting frustrated. Whereas if they apply a process, and that's what we teach, is to apply a process, the process doesn't always work, right? Because that's trading, but at least you're doing something at an area where probability is on your side. And I teach these guys how to recognize probability, and that really helps, again, calm traders down. So for me, it's about having that type of a process.
Yeah. And something that we've really seen with trading the post is the longer that people are in it, the greater faith they have. And it's almost like you can see their blood pressure going down. And I think it's because of what you're talking about. You're playing a game of probabilities. So on any given day, if you just were gauging your opinion on the trading the post, program on a single day, who knows where the probabilities are going to go which way or another. But if you have a sample size of 3 months, then like pretty uniformly people are like, this just works way more often than not, when I'm taking the trades that are in here. So
yeah, I think the most recent group of traders that have joined trading the post kind of went through it's like, yeah, I trust what he's saying, but I'm still trying to do it my way. And then when they finally capitulate and start to use the process, I start getting direct messages, right? Like, hey, just want you to know this is really helping me. It's really working. I mean, who did we have? We had somebody, was it 2 weeks ago, that was like, yo, I paid off my car and my house, right?
Yeah. He was like, he said he paid off his wife's van and his house. And he was like, I'm completely debt free. I was like, That's sweet.
Yeah, it was like, I had no idea you were doing that well. That's great. Like,
Right.
you know what I
Right.
mean?
Right.
So I do get DMs like that though, when they're like, hey, I'm finally starting to listen and I'm finally applying the process and it's working. Then I know when I'm starting to break through for some, for some traders, which is really where you want to be, because we're all gonna take losses, and we just want to know when we should be cutting and shutting them down so we don't do serious damage to accounts, right?
Yeah.
And then
Yeah.
just it all just loops back together.
Yeah.
The
Yeah.
rug
And I
ties
don't,
the room.
and they don't, I think you provide people with a process and a framework to approach, sort of every decision, no matter what happens. There's an answer. It's a little bit of like an algorithm in that perspective, but people are still personalizing and customizing this to their own needs. And I feel like you're a big believer in that, right? Like everyone is going to implement this in a way that's stylistically for them. You're not necessarily out there, because there are traders, trading mentors, prop firms out there. They say, no, you're going to do exactly this. We have one strategy. We have one method. You will execute exactly this. That is it. There's no, I don't care what Ron thinks, personally, or Charlie thinks personally. Like, so you give people, there's space to maneuver and personalize this and pick what works and let
Yeah,
go of what doesn't.
for sure. We're trying to teach you how to fish, but we're not teaching you what fish to catch, right?
Right.
So,
right.
We're going to give you what we do is we give a number of different strategies. And what's important about having a handful of strategies is that you have to recognize what the market is telling you. You can't go to the market and say, I want to be a premium collector, and the only thing I'm going to do is write iron condors. There has to be a condition for you to be able to apply that strategy. You
Right.
can't just run in and start throwing down, this is my strategy and I'm going to use it on everything. And there are traders who get caught in that, like, oh, I really love that strategy. That seems like it'd be a fit for me. But then they fail to recognize the information that's being said to them by the market. And we have tools that we teach you how to recognize when you're in that mode. It's up to you to apply it, right? A lot of traders will follow along with trades that we're looking at, but then a lot of traders will trade their own comfort level and their own stocks. And sometimes somebody is only good at one or two strategies, but they recognize when it's correctly applied and they wait for the condition. That's hard to do. Being patient and waiting for the condition to set up to meet your needs is very difficult. It takes a ton of patience.
Yeah. Yeah, but the more it's a muscle, the more you hit a trade with that, and you're like, ooh, okay, this works, and that gets reinforced, and then you're like, okay, and then the next thing you know, you have patience, and people are asking you, how did you develop patience? And you're like, I worked at it.
Yeah.
Do you? So, I mean, let's talk about like, in the game, in the world of predictions, right? Like, the most cliched example is like, when are they going to raise rates, right? How much are they going to raise rates? So in a situation like that for you, talk a little bit about your perspective around that potential event. Like, how do you, you're saying, I'm not, okay, go ahead.
Yeah, no, good. So my perspective is always, and it's one of the things I think that all traders have to get to, is the question to not ask is why. If you ask why, or let's say, for example, economic data is coming out, or an earnings release is coming out, and all you're doing is you're speculating, and well, if this happens, then the market's going to do this, and if this happens, the market's going to do that. To me, there's so many more people in this industry who are smarter, who are brighter, who are way more educated on the subject than I am, that have great pedigrees, et cetera. So I can't be in the why game. I have to be in the what's next game. So for example, if I know an earnings release, or if I know an economic number is coming out, I just need to know what time it's coming out. And then I need to be ready to look for a change in behavior in the marketplace, whether that's long, short, or sideways. So what I do is I set alerts. I read the economic, like the economy calendar. I know when specific events are coming out, and I know that there could be an opportunity after that event comes out. I'm not in the business of saying which direction it's going to go. I'm in the business of saying, okay, I recognize the direction now because of an event, and can I play it?
Yep. Gotcha. And then you just have confidence that no matter what happens in that event, no matter what transpires, you're going to be able to be reactive if necessary. And you're not putting on crazy risk going into, like, you're not rolling the dice going into Amazon earnings and stuff like that.
Correct. I mean, you can, those are things you can do, but we talk about that. I probably do that maybe once or twice a year just for shits and giggles to take a shot. Right.
Right.
And to me, it's fine if a trader wants to do that, if they have profits from another trade and if they use a portion of those profits. Right. But if you just YOLO on an Amazon or a Google, hey, if you get lucky, that's awesome. But more times than not, why do I want to be involved in a coin toss? Right.
Right.
I'd rather be lined up where something looks like it's more like 80% probability, you know what I mean? And I can see it unfolding, as opposed to an earnings release, which is a blind bet, right?
Yep.
Unless you're an insider, right? Like, it's a blind bet. So I don't want to be a part of it unless it's free money that I don't care about, right?
Yep. Yeah. And I think, one of the things that people in here might be saying, like, hey, like, there could be a little bit of a craving for people to hear a little bit more specifics about, like, okay, well, what are you actually doing with options? Like, what option strategies are you using? Like, what are the technical, how are you using iron condors, blah, 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 blah. And we are going to have a dedicated webinar in this series with Lucci. So that's going to be Tuesday, March 1st. So that's, we got a little bit of time for that, but we are going to go deep into some of what, Ranch does. We're not going to give away the farm, obviously, but, we are going to talk about some of those things. So, if you're sitting here saying, give me details, give me specifics, we'll get there. I mean, can you talk, Ranch? I don't know if you can, like, look back at 2021 and think about, a move that was, particularly not predicted, that the trading the post room, reacted to, and how it handled, something that maybe caught people who were making a lot of predictions, who had heavy biases, flat-footed, and how the trading the post room was just like, all right, this is how you coached people to trade around that.
Yeah, I mean, so I can give you an example, like on Amazon. And one of the things that one of the trades that we like to take are gap fills. We like to look for gap fills. We like to look for specific technical setups to take those gap fills. But the rule on gap fills, and it's a guideline, right? But when I look for probability, gap fills typically have an 80% probability. So we look for gap fills. Once a gap gets filled, then 80% of the time that reverses direction after the gap has been filled, right? So from a probability standpoint, it's a very good trade setup. So Amazon was a prime example, and I didn't mean to say Amazon Prime, but there's a hole. There was a hole in the chart on Amazon, and it had bottomed out, and we were playing for gap fill. And we got very, very close to filling that gap. And there were some really nice trades. And then there were some traders who unfortunately got stuck in a mindset that, hey, the gap hasn't filled, we still needed to fill the gap, but it didn't fill, right? It receded before the gap got filled. So it's one of those 20 percenters that didn't fill the gap, right? Mm-hmm. But what they didn't do is they didn't recognize it, and they stuck in the trade, and it really cost them, right?
Right.
So that's an example of where you look at a trade, and you look at a trade setup, and then as you're riding it, there are certain techniques that we use to move from one strike to another. So if that thing doesn't go the rest of the way to fill and comes back on you, you're still going to be profitable. You're probably going to give up a little, that you were hanging on to wait for the rest of the gap fill as it comes back. But that's, what I mean? That's just kind of the way it goes. You're never going to pick the top. You're never going to pick the bottom. And if you accept that, you're good, right? But that Amazon trade wasn't a specific example last year of one.
Yeah. Got you. Yeah, that makes sense. I mean, it kind of sounds like we do a lot of, analogies here, but it's like, surfing, for example. You can't just say like, oh, I'm going to grab this wave and it's going to be like this all the way into the beach. Like, you're on the wave, things happen. You're riding that like the wave, it's going to change. Some dude comes out of left field and, you know, cuts you off, whatever. Like, you got to be able to react to that and manage that. And that's what you're saying. Like,
Yeah.
and that's part of what you coach and what you emphasize.
Yep.
Yeah. Yeah.
And again, it's all different because I don't know each individual member, and I don't know what each individual member's strength in trading is. All I can do is say, hey, listen, I have these specific trades on, and here's the playbook. Here's my playbook. Here's what I'm looking for. Here's what I'm going to execute. And I'm at least, with the exception of this week, because it's been a difficult week for me to get back in the chair.
Right.
I'm typically shouting out 3 or 5 viable opportunities for traders, short-term traders, to take advantage of, right?
Yeah,
on
every day.
Swing and long-term trades. You know, we're pretty methodical about it, and you know, we're deliberate about where we're going to take, you know, an entry, or you know, is it a quarter position? Is it a half position? Are we looking to, you know, to write against it? Like, there's a lot of moving parts, and it's up to the individual to say, okay, now that I understand all the individual moving parts, which moving part am I going to be good at?
Yeah.
And I help on each one of those. I mean, you know, we go over it weekly. So, you know, we do a webinar on Mondays and Thursdays, and there are plenty of times, plenty of days where I'll come in and just do live trading with everybody. And I think the live trading really has helped a lot of members put together what to do, because it's very different to sit here and talk about it and chalkboard it than when the actual level 2 is up in your face and bullets are flying and you're starting to click buttons with your own money. It's really different, really different.
Yeah. And we've heard people say, you know, going back to calling the fuck down, like listening to you when shit is hitting the fan, and listening to you and watching you trade through that helps people connect the dots. Like, oh, you actually can be really chill and grounded and calm through crazy markets. Like, yep. I'm watching somebody do it, and you're just kind of like actually putting that possibility, I feel like, in people's heads. Whereas, you know, for a lot of people, they don't know anybody who trades. They're kind of making this up as they go along, and they've never traded alongside other people. So they're like, when shit gets crazy, you got to get crazy. That's how it goes.
Yeah. And, you know, just like with anything else, not everybody, you know, if you're not a trader, they don't want to necessarily have a conversation about trading, right? Their eyes glaze over and they're like, what are you talking about? Right. And, or some people will be like, well, just buy gold. You know what I mean? You're like, oh, okay, I can't talk to you.
Right. Yeah.
Just buy Bitcoin. Okay.
Cool, dude. Thank you for that hot tip.
One of my buddy's kids was saying that. He's like, oh yeah, Bitcoin's down. I'm buying more now. I'm like, okay, what are you basing that on? Well, it's down. Okay. Like, buy low, sell high. Yeah, I get it, but why here? Well, I don't know, it's just down. Okay. Good luck.
Go with God. I want to open it up to people who have questions. If you guys have questions, do me a favor. It makes it easier for me. Throw them in the Q&A section of the chat, and we can get some questions in for Ranch if you all have them. And you know, I'll make a quick pitch here, just an explanation of what's going on for the course. So, you know, as we talked about, Ranch developed his method, Trading the Post. You know, we launched a room around that. It's within the Wall Street Jesus Insane Lucci platform. You know, everything is accessible in there, and people subscribe on a monthly basis and go in there. But really, when we came to the course, Ranch is an educator. He's a big part of the Sang Lucci Master Course, which some of you know is our flagship, you know, sort of big time educational experience. We do it once a year, really live. And in part of that experience, Ranch gives people a primer, like a 2-class primer on his Trading the Post methods. And we always talk to people, hey, what's worked for you? What resonates? What did you like? What can we do better? And consistently across the board, we were just getting all this feedback from people being like, this Trading the Post thing is awesome. It's incredible. It really it helps me feel like I know where I'm at. I feel, the sort of process oriented approach to markets. Like I really feel like I can manage risk, and kind of feel calm, when I'm sitting in the trading chair, looking at my positions. And so for people who are not necessarily like super aggressive gunslingers, like, trying to scalp big positions, on a daily basis, maybe people who are willing to be, more patient, more gradual. Not to say that you have to sit on your hands every day, except for one day a month or something like that. Not at all. But, I think it really works for people who like to have, a process and a measured approach to things. So we got all this feedback of people who were like, you guys got to have a course. You got to have a dedicated Trade in the Post course. And, Ranch is a busy guy. And, so we did a lot of work on it, and now we're here. That's why we put together the course. So he's going to teach it live starting March 7th. Monday, March 7th is when the course starts. If you want to learn more about it, you can go to tradingthepost.com and learn all about it, and learn about, what we're offering there. So certainly encourage you all to do that. You can also set up a call on that page if you want to talk to somebody on our team about it, and they can fill you in, tell you more. You can always email us, contact@sanglucci.com, contact@wallstreetjesus.com. It all goes to the same place. So yeah, that's the quick and dirty on the course. And yeah, let's see, we can start queuing up some questions here. This one, I got another one here from somebody who was in the chat. How do you, we talked about this a little bit, like how do you strategically engage with markets that could go anywhere, certain option strategies that you use to enable you to take advantage of that?
Can you repeat that question in a way that a golden retriever could understand it?
I think they're asking around like options. Maybe you can just talk a little bit about like the types of options strategies that you use that enable you to, trade markets that could kind of like, especially with markets these days, like just go anywhere at any moment.
Yeah. Yep. So what I like to do is, when I gave the house analogy, what I like to try and find, especially like from a long-term perspective, is a good company that has stumbled and is going to try and find its way out of that stumble. PayPal is an example, right? So more than 50% off from its year-to-date highs. And, that represents a potential opportunity from a long-term perspective. So for example, if you're a trader, who doesn't have time to sit in front of the screen, but you've got some capital that you want to put to work, an opportunity like that, when something is already sold off that much, if the broader market pulls, the likelihood of that one being already beaten up as far as it has been beaten up becomes less of a probability to go down, right? There are techniques and things that we look for to kind of say, we think that this is at an area where it's going to be a good buy. Like I said, we're not always right. We don't always get the right spot, but what we try to do is we try to find, what used to be a nice house, but, mom and dad left on vacation and didn't pay the mortgage, and the high school kids came over for Tuesday and Thursday night parties for an entire semester kind of thing. So
right.
We're looking for that type of an opportunity, so that if the broad market is continuing to be uncertain, if it pulls, et cetera, that we're still in a position that still has potential upside because it's already been beaten up. That's just from a long-term perspective, right?
Right.
Great case in point was after the pandemic, the pandemic pullback, right? We're looking for it, to find its bottom and start coming back up. We're looking to enter in those types of scenarios. Like if the market's continuing to come down, we're just either going to step away and let it do what it's going to do for that long-term opportunity, or we'll play something short-term to capture that direction and, stack some more cash in our account, so that when things finally settle down, you do have an opportunity and you do have some dry powder to buy, because it can be very difficult to buy in conditions like this. It can be really nerve-wracking, right? So, that's how we go about it. And entering into positions in, quarter lot sizes instead of, hey, this is the spot, we're going all in. Legging into a position is a big deal, and it leaves you mental capital as well as actual capital to be able to stay with the trade.
Yeah. Can you talk about stacking a lot in trading the post? Can you explain what stacking is?
So, for example, let's just stick with the PayPal example. For example, if I'm buying an option a year out, I can play short term around that long term option. So, for example, if PayPal continues to go down, I can write against my long term position and collect premium on a daily or a weekly basis. I can do it on a bi-weekly basis, every 3 weeks, every month. Whatever my time frame is or whatever I'm comfortable with. Ultimately, what happens is you pay down or you pay off that quarter position or that half position, whatever size it is. So then it becomes a risk-free trade, right? You've already paid for the trade. Don't get me wrong, the money that you collected along the way is yours. But my mindset is, okay, now that quarter position is paid for. I don't have to pay as close of attention to it. Or, hey, it continues to be a piggy bank for me. I'm just going to continue to bring in that weekly premium and just keep depositing it in the bank, right? And then over time, it just stacks up, right? Yep. So that's the technique where in the right conditions, when something moves higher and you're in it properly, you look at, you're starting to have returns that people just simply don't believe, right? 400, 500, 800%, 1200%. People are like, you're full of shit. And it's not the case. If you're managing trades around it, those are the types of returns that you can get. And we have members who will vouch for that.
Yeah. Yeah. Another question here, since you're trading different time frames, like how do you keep everything organized when you have multiple positions?
Great question. I have an account just for leaps, one account.
Mm-hmm.
I have another account where all I use it for is scalping and swing trades. That's how I keep them separate.
Yep. Cool.
It really helps to have different accounts for different activity.
Yeah. And that speaks to a little, and actually another question here, like, do your strategies work for small accounts with no margin abilities? Some of what you teach, I would think, a lot of the option writing stuff that you do, like it helps if you have a bigger account like the size that you have. But then there's also other stuff that you do and other strategies that people in the room are using that are can be used with any size account, right?
So here's the thing with smaller accounts. I mean, you just have to call it how it is. It's difficult, right? And it can be difficult because if you're looking for a long-term position and you have a small account and that one long-term position it doesn't have a good year, you've not made any progress, right? Yep. So that forces smaller traders to look into, well, maybe I'll take a shot at scalping, right? And if they're not paying attention and they don't apply what they learned to scalping, they have a very high probability of just burning the account out, right? So the question becomes, if you have that small account and you want to grow it and you want to scalp, well, can you and do you have the ability to sit in front of a computer screen for most of the day looking for and waiting for the opportunities for you to trade? Does that make sense? So I don't want to discourage the small account holder, but it is harder. And you're going to have to decide whether, hey, I've got a 9-to-5. I like a long-term setup and, this is what I can do. So that really is a battle that, smaller traders without margin that are trading with 5 or 10 grand have to contend with. That being said, it can be done. I mean, I've done it. And it takes extreme patience, and you've got to realize that not every day are you going to trade, right? You're going to be very methodical and you're going to trade at certain levels as opposed to sitting in front of the screen all day, right? So can you, as the individual with a small account, make a difference between the two? Are you going to scalp and sit in front of the screen all day, or are you going to play a longer term position which doesn't require you to sit in front of the screen all day? right?
Yeah, I mean, I would. It's a tough paradox sometimes with people with smaller accounts, because they have a smaller account and sometimes they think, well, this is the money that I have for trading. So if I'm paying for, a course or a site or whatever, that's taking money out of my account. But really, the people with smaller accounts, they need the probability to be in their favor that much higher, right? They
Yes.
that much more. They need the probability to be higher because they have fewer bullets in the chamber, right? And so for people who, and you need to be in it, like, in the course, like Ranch has, like, there's a module about doing it with small accounts, like doing it under PDT. Like he addresses this. He talks about it. So it's not like this is just sort of an afterthought. But you need to be in a program where people are actually acknowledging and giving feedback on, okay, if you're on a small account, like this is how to adjust XYZ, what we're doing in order to accommodate that. So yeah.
It also depends on how much work you're willing to put into the program, right?
Yeah, for sure.
And there is a learning curve, no doubt.
Yeah, and we're not ever going to sit here and say you don't need to put in the work. You got to put in the work. Ranch didn't get to where he's at by not putting in the work. So Ranch, I promise I would get you out of here in around 45 minutes. We're about at that point, so I think we can call it for this one. And I'm going to see you Tuesday for the next episode in this series, which we're talking about technical analysis and options trading, which I think is like, a lot of people use technical analysis. A lot of people talk shit about technical analysis.
Yep.
A lot of people trade options. A lot of people want to know, like, okay, what in the intersection of all these universes, like what maybe should I be using? What do I need to, what other methods of analysis do I need to bring in to be able to reliably use technical analysis and options? So that's what we're going to talk about. So we'll see you guys Tuesday after the close. Reminder, check out tradingthepost.com for more details on the new course. And thank you everybody for being here. Ranch, as always, man, thank you for coming.
Yeah, thanks everybody. Appreciate it, Charlie. All right, guys.
Yeah.
Have a good night.
See you guys.